Land in the U.S. isn't expensive. List prices are lying to you. Open Zillow right now and you'll see thousands of land listings priced at numbers no real buyer ever pays. And here's the strange part. They still sell. Just not to the people who believe the list price. They sell to people who understand one uncomfortable truth about the land market. In land, the asking price almost doesn't matter. And if you are using list price to decide what you can or can't afford, you're quietly disqualifying yourself from the best deals in the market. The illusion. Why land looks expensive, but isn't. Land looks expensive today. Open Zillow, open Redfin, open the MLS. Everywhere you look, you see land listed at prices that feel insane. $200,000, $500,000, sometimes millions of dollars for raw, vacant land. So buyers reach the same conclusion. There are no deals left. Everything is overpriced. The opportunity is gone. But that conclusion is built on a mistake, because the number you're reacting to is not the market price. It's just the asking price. And in the land market, asking price and real value are rarely the same. Land doesn't trade like houses do. When house is overpriced, buyers still show up. They tour it, they compare it, they make offers. The market corrects the price quickly. Land doesn't work that way. There are no open houses. There is no foot traffic. There is no urgency. So when land is overpriced, nothing happens. The listing just sits there, month after month, sometimes year after year. And that's how the illusion is created. Buyers scroll through endless listings, all overpriced, all unsold.
And they assume that's what land is worth. But what they're really looking at is something else. They're looking at a market full of people who aren't real sellers. Many landowners don't need to sell. They inherited the land. They've owned it for decades. Their holding costs are low. So they list it high, not because that's what it's worth, but because there's no downside to trying. If it sells at their dream number, great. If it doesn't, they're fine waiting. That behavior distorts the entire market. This is why land feels expensive, not because supply is gone, not because demand is overwhelming, but because asking prices are disconnected from reality. And this is the most important thing to understand. Asking price is not a signal of value. It's a signal of expectations. And expectations can be wrong, sometimes wildly wrong. In the next chapter, you're going to see exactly how wrong. Real listings, real price histories, real sales. Land that sold for 40, 50, even 70% less than where it started. Once you see that gap, you'll never look at land the same way again. So if asking price doesn't represent real value, the only question left is this: how far apart are they really? Not in theory, not in opinions, but in actual sales.
The proof. How land actually sells. The fastest way to understand the land market is to stop looking at listings and start looking at sold properties. Because sold listings tell a very different story. Here's the first example. A 50-plus acre property in West Virginia. It was listed at $500,000. No buyers showed up. So the price was cut, then cut again, and again. Over the course of a year, that land dropped from $500,000 to $290,000, a 42% discount. And nothing about the land changed. No improvements, no new access, no zoning upgrades. The only thing that changed was the seller's expectations. Here's another one. 35 acres in Minnesota, originally listed at $1.6 million. No offers, no serious buyers. The listing expired. Then it came back, not at $1.6 million, not even close. It was relisted under $700,000, and it sold for $635,000, a 60% drop from where it started. Nearly $1 million erased without the land itself changing at all. Here's a smaller example. 31 acres in North Carolina. Originally listed just under $100,000. The price was cut, then cut again. 2 months later, it sold for $22,500, a 75% discount. At this point, it's easy to think these are rare cases. They're not. Anyone watching this can verify it. Pick any market in the country. Look at 10 sold land listings. You will almost always find 1 or 2 properties that sold at massive discounts from their original asking prices. Based on years of data, somewhere between 15 and 25% of land sales in the U.S. close at 50% or more below where they were first listed. This isn't an anomaly. It's how the land market works. So why don't most buyers know this? Because they never make it this far. They stop at the listing price. They assume it's real, and they walk away. Meanwhile, the buyers who understand this gap are making offers while no one else is paying attention. And that's where the real market exists. In the next chapter, we're going to explain why this gap exists at all, why sellers consistently overprice land, why most buyers never make offers, and why the few who do end up controlling the market. Why this gap exists. Fake sellers, real buyers. So if land regularly sells far below its asking price, the obvious question is why? Why does this gap exist at all? The answer is not complicated, but it is uncomfortable. Most people listing land are not real sellers. They look like sellers, they sound like sellers, but they are not actually trying to sell. A real seller is simple to define. A real seller is someone willing to sell to a market buyer at a market price. Most landowners don't meet that definition. Land is different from houses. People sell houses because they have to. They need to move. They need liquidity. They need a transaction. Landowners rarely feel that pressure. Many inherited the land. Many bought it decades ago. Many have almost no carrying costs. So they list the property without urgency. They are not testing the market. They are testing their ego. This is how it usually works. Step 1. The owner guesses a number. Not based on sales, not based on comps, but based on what they feel the land should be worth. That number is almost always too high. Step 2. The property is listed. Step 3. Most buyers see the price and move on. They don't ask questions, they don't run comps, they don't make offers. They assume the price is real.
Step 4. The only people who do make offers are offering far below asking price. And that's when the seller faces a decision. Do you actually want to sell, or do you want to keep pretending? Here's the part most buyers don't understand. Many sellers choose pretending. They enjoy seeing the listing live. They enjoy telling friends the asking price. They enjoy rejecting offers. They get satisfaction from it because someone else is doing the work for them. An agent fields the calls. An agent handles the emails. An agent brings them offers. Turning those offers down feels good when it costs you nothing. But that doesn't make them sellers. It makes them spectators. If they had to market the land themselves, answer every call, respond to every email, walk the property with buyers, most of them wouldn't bother. They would stop answering the phone. This is why asking price is meaningless in land. It is not anchored to urgency. It is not anchored to need. It is not anchored to reality. It is anchored to emotion. And emotion is not a reliable pricing mechanism. Now look at this from the buyer's side. 90% of buyers never make an offer. They see a high price and assume negotiation is pointless, so they remove themselves from the market without ever participating in it. That leaves a very small group of buyers, less than 10%. These buyers understand something critical. They understand that making an offer is how you discover the real price. When a property is still for sale, it means one thing. There is no market buyer at the asking price. That means the market price has not been found yet. And the moment you make a serious offer, you become the market. Not in theory, in practice. This is why fake sellers don't matter. If someone turns down a realistic offer, they were never going to sell anyway. Nothing was lost. But when a real seller receives a real offer, something changes. Because now they have a choice between theory and reality, between the price in their head and the cash in front of them. And that is when deals happen. Most buyers never reach this point because they stop at the list price. They treat it as real. They treat it as final. And by doing that, they make buying land far harder than it needs to be. Once you stop taking asking price seriously, the entire process changes. Land stops feeling expensive. The market stops feeling competitive. And what once looked impossible starts to look obvious. In the next chapter, we're going to put this understanding to work. We'll look at real listings that appear valuable on the surface, but are deeply mispriced. And we'll break down how to tell the difference between land that looks expensive and land that actually has value.
How to spot mispriced land in plain sight. Once you accept that asking price is emotional, the next problem is obvious. How do you tell which listings are fake expensive and which ones are actually overpriced? Because not all high prices are lies. Some land really is expensive. The difference is not the number, it's the structure behind it. The first mistake buyers make is comparing land to other listings. Listings are opinions, sales are facts. If a piece of land has been listed for 6 months, a year, or longer, the market has already spoken, not by bidding it up, by ignoring it. Time on market is information. Long time on market means price resistance. Now look closer. A common pattern shows up again and again. The land is perfect for development, great investment opportunity, prime location. But there are no permits, no zoning clarity, no recorded access, no utilities nearby. The value is imagined, not realized. Here's the key distinction most buyers miss. Raw land is not valuable because of what it could become. It is valuable because of what it is allowed to become. Permission is the asset. Without permission, you are not buying land, you are buying hope. This is why two identical-looking parcels can have wildly different values. Same size, same location, same view. One sells quickly, the other sits for years. The difference is not luck, it's entitlements, zoning, access, water, power, environmental restrictions, invisible factors that don't show up in photos. Now watch what sellers do. When a seller knows the land is constrained, they talk in adjectives: beautiful, peaceful, private.
When a seller knows the land is buildable, they talk in facts: lot size, zoning code, approved use, setbacks, utility distance. Details signal confidence. Vagueness signals denial. Another warning sign is price anchored to nearby homes. Sellers will say, houses nearby sell for X. That logic is backwards. Finished homes reflect years of permitting, capital, labor, and risk. Raw land does not inherit that value. If it did, developers would have bought it already. This brings us to the most revealing signal of all. Who owns the land? If the owner is an individual with no development history, no timeline, and no financing tied to the property, the asking price is almost always aspirational. If the owner is a developer who already pulled permits, paid studies, and cleared obstacles, the price starts to mean something, because real money has already been spent. Here's the paradox. The best opportunities rarely look like bargains. They look boring. No dramatic language, no flashy photos, no emotional storytelling, just clean facts and a seller who is ready. Those are the listings most buyers scroll past. By the time a listing looks cheap, it usually is. Cheap for a reason.
The opportunity existed earlier when the price looked unreasonable, but the structure was solid. This is the mental shift. Stop asking, "Is this land cheap?" Start asking, "Why hasn't this sold?" The answer to that question is where value is hiding. In the next chapter, we'll flip the perspective. Instead of looking at bad deals, we'll look at why most buyers fail even when the deal is good. Because pricing is only half the problem. The other half is buyer behavior.
Why most buyers fail, even when the deal is good. At this point, price is no longer the problem. Behavior is. Most buyers who fail are not priced out. They walk away while the door is still open. The first failure is hesitation. A buyer finds land that works. Not perfect, not risk-free, but viable. The zoning is clear. Access exists. Utilities are possible. Instead of acting, they pause. They tell themselves they're being careful. What they're really doing is waiting for comfort. Comfort never arrives. Land does not come with certainty. It comes with probabilities. Every week a buyer waits, nothing improves. The price doesn't drop faster. The risk doesn't disappear. What changes is who shows up next. The second failure is the need to be right. Buyers don't just want a good deal. They want confirmation. They want comps that agree with them, agents who reassure them, data that removes doubt. So they keep researching. But research without engagement is just delay. Here's the hard truth. The land market does not reveal itself to people who stand outside it. The only information that matters appears after the offer. Counteroffers, silence, rejection. That's where real pricing lives. Before that, everything is speculation. The third failure is ego. Buyers worry about being ignored, about offering too low, about looking inexperienced. So they protect their self-image by never making the first move. This feels rational. It isn't. Markets don't reward politeness, they reward participation. Then there's the illusion of progress. Buyers tour land, they walk boundaries, they talk to neighbors, they feel productive. But none of this tests the market. Without an offer, nothing is learned. You can study land for a year and still know less than someone who made one serious offer. Another failure is mistaking rarity for urgency. Buyers assume that if a deal is good, someone else must be close, so they rush mentally but stall behaviorally. They feel pressure without acting under it. That contradiction paralyzes them. The reality is simpler. Most good land listings have very little competition, not because they're bad, but because buyers disqualify themselves. They see the price, they see the uncertainty, they walk away. The deal doesn't disappear, the buyer does. The final failure is treating offers as commitments. An offer is not a promise, it is a question. It asks one thing: are you real? To the seller and to yourself. Buyers who succeed understand this distinction. They don't wait to feel ready, they act to get clarity. They don't fear rejection, they use it. Each no narrows the real price. Each response reveals motivation. This is why so many buyers fail, even when the deal is good. They never cross the line between thinking and doing. They stop in analysis in a market that only responds to action. In the next chapter, we'll step back even further, because this isn't just about land, it's about how markets quietly reward those willing to act while others wait for permission. Why the fire sale has only just begun. By now, you probably see it. This isn't about a few lucky deals. This isn't about cherry-picked listings. And this definitely isn't about timing the market perfectly. This is about structure.
The land market is quietly breaking in a very specific way, and most people haven't noticed yet. Here's what's actually happening. For the last several years, landowners were insulated from reality. Rates were low, speculation was easy, and holding costs didn't feel painful. You could list land at a fantasy price, ignore offers, and wait. There was no urgency, no pressure, no consequence. That era is ending. Property taxes are rising. Insurance costs are rising. HOA fees are spreading into places they never existed before. And for a growing number of landowners, income is no longer keeping up. Land doesn't produce cash flow. It doesn't pay you every month. It just sits there and costs money. And when financial pressure builds, land is usually the first thing people are willing to let go. Not because they want to, but because they have to. That's why you're seeing more price cuts. That's why listings are sitting longer. That's why sellers are quietly becoming flexible. And this is the part most buyers misunderstand. The real discounts don't show up at the beginning of the downturn. They show up after denial. First comes optimism, then price cuts, then silence, then frustration, then motivation. Most buyers only notice the market once the headlines turn negative. But by then, the best opportunities are already being taken by people who were paying attention early. And that's what separates successful land buyers from frustrated ones. Successful buyers don't wait for permission from the market. They don't wait for prices to look reasonable. They don't wait for consensus. They understand that asking prices are emotional artifacts, not data, and they operate accordingly. This is why making offers matters more than watching the market. If you sit on the sidelines waiting for the perfect signal, you miss the sellers who are quietly ready today. If you only pursue listings that feel fairly priced, you're competing with everyone else, and competition is where value disappears. But when you make disciplined offers based on real value, something interesting happens. You stop chasing deals. Deals start revealing themselves to you. You find the sellers who are tired, the sellers who inherited land they don't want, the sellers whose plans didn't work out, the sellers who need certainty more than they need top dollar. Those sellers don't announce themselves. They don't show up in headlines. They reveal themselves only when you make the offer. And this is why the fire sale hasn't peaked yet, because most buyers still believe the list price. They still hesitate. They still assume rejection means failure. They still think negotiation is something reserved for professionals. As long as that mindset dominates, the opportunity remains. The land market doesn't crash like housing. It doesn't collapse all at once. It deflates slowly, unevenly, and quietly. And that's exactly why it rewards people who act instead of react. So if there's one idea to take away from this entire breakdown, it's this. You don't need perfect timing. You don't need insider access. You don't need to predict the bottom. You need clarity about value. You need the willingness to make offers, and you need patience. Because right now, across the country, there are landowners who want out. They just don't know you exist yet. And the only way they'll ever find you is if you're willing to make the offer that everyone else is too afraid to send.
If this video changed the way you think about land, that's the point. Most people never question list prices. They just assume the market is expensive and walk away. If you found value here, take a second to like the video. It helps more than you think. If you want more breakdowns like this about land, housing, and markets that don't behave the way people expect, subscribe to the channel. And if you're actively looking at land right now, don't just watch the market. Open a listing, do the research, make the offer. That's where the real education begins. Thanks for watching.